For everyone joining us, we will get started in about 2 minutes. All right, everyone, it is top of the hour here, so let's go ahead and get started. Before I hand it over to our presenters today, just a few announcements for you. As a reminder, this webcast is not for CPE credit, just informational only. It will be recorded, and we will send out the recording probably by end of the week. So we will do that via email. We'll also post it to the eyebailly YouTube page. If you do have any questions throughout the webinar, please feel free to use the Q&A box located on your menu bar, or you can use the chat feature. So we're going to go ahead and turn this over now to Leela and David and get started. If you click on the screen, Leela, you should have control.
Okay.
There we have
Okay.
little
Okay,
technical difficulty. There we go.
Okay,
Sorry, guys.
There we go. Okay. Whoops. Did I go too? Okay. I think I'm all right. Okay. Should we go back up? Here we go. Okay. David, you want to introduce yourself or?
Sure, that's
Okay.
That's
Since
fine.
you're up first. Okay.
Thank you, Leila. My name's Dave Hashmall. I'm an attorney with the Minneapolis law firm of Fellhaber Larson. I practice in the area of insurance law. I represent insurance companies. I represent insureds, both sides. I've been doing this for many, many years. I hope I can be helpful to you today.
I'm Leila Lawless, and I am a director at eyebailly in eyebailly's Phoenix office. I specialize in economic damage calculations, lost profits, and have prepared a number of insurance claims over, I guess, about a 20-year, I've got about 20 years of experience in this area. So David, you're up first, and we're going to get started then.
Great.
Okay.
Thank you, Leila. Today, when we talk about potential insurance coverage for the coronavirus and COVID-19, it's interesting to realize that these insurance disputes, and there will be disputes, these insurance disputes really revolve around the same dynamic that occurs with any insurance dispute. The insured has purchased a policy. The insured has done so to cover unanticipated circumstances. The insured has suffered an unanticipated loss, and the insured wants coverage. Conversely, the insurance company knew there was going to be losses, and it's issued a policy, and it wants the coverage to be limited to the policy. So that much is really typical. What is completely untypical here is that we are dealing with a worldwide pandemic. And arguably, this was not truly anticipated by either the insured or the insurance company, and the particular issues and the way that those issues will be decided by courts and legislatures is very difficult to anticipate. And I will try throughout this presentation to emphasize that uncertainty and point out how it will affect the issues and which issues it will affect, because what the takeaway from this should be and will be is the uncertainty and how you, as insureds, should consider responding to that uncertainty. So there's tons of uncertainty, but that said, as I mentioned earlier, the dynamic is still the same, and the starting points and the data points for analysis are still fundamentally the same. And the beginning data point and the most fundamental data point is your insurance policy. Some of you may be quite familiar with insurance policies, but for those of you who are not, I'm going to briefly give you the structure so you can conceptualize the issues. You need to understand that your insurance policy is a contract. It may be an insurance policy, but it's a contract. And it's a contract in which you've agreed to do certain things and the insurance company has agreed to do certain things. And the most important aspect of what the insurance company has agreed to do is it's agreed to provide coverage. And that's referred to as the insuring agreement. And policies actually are set forth where you can read the insuring agreement separate from other parts of the policy, such as the exclusions. The insuring agreement will say what's covered for you. The exclusions will say what's not covered. And then moving on, you will see that the policy also contains your conditions. And that would be on the next slide, Lita. That your policy will have other things such as the definitions, and the definitions can sometimes be critical in determining the scope of coverage, the limits of coverage, obviously how much you will be paid. But what's very important for our discussion today is the conditions, because you must comply with conditions in order to obtain coverage. There are many types of potential coverages for coronavirus losses. Today, we're going to focus on loss of business income from business interruption. But there are other coverages, such as crisis management coverage, or if we go into the next slide, you'll see coverages. Some policies will have actually coverage for diseases. Some policies will have event cancellation coverages, cancellation of booking coverages. The point being that unless you study your policy and work with your broker to determine what your potential applicable coverages are, you won't know if you're covered. One of the forms of coverage that larger insureds sometimes have is referred to as manuscript coverage. That's coverage that has been written particularly for that insured and has its own particular coverages, and again, therefore bears particular study. So in terms of action items, the first action item is to determine what coverages you have. Now, most policies do have business interruption coverage. It's not often remembered outside of the insurance industry that this is a form of property coverage. It's usually in the property coverage part of the policy, and that is shown by the fact that what it covers is the suspension of your business operations, but not the suspension caused by anything. It's the suspension caused by direct physical loss, damage, or destruction to property. And that is where the $64 trillion question will be with regard to business interruption coverage. The question will be, has there been a direct physical loss, damage, or destruction to property? And the courts really approach that in different ways. So if we go into the next slide, Leela, there's a outline of that in the first approach. And I'm going to take one step back and point something out. You have the question, which I'm about to speak to, about whether or not contamination with the coronavirus is direct physical loss, damage, or destruction to property. And you will have certain insureds who will have evidence or an argument that, yes, my property has been contaminated, and now I want to talk about whether it's been directly damaged as a result. That's one group of insureds. But you have a different group of insureds who won't be able to say that, who won't be able to say we had sick people in our offices, and who are shut down simply because of the shutdown orders and the general shutdown of the economy. So the analysis of direct physical loss or damage to their property is really not in play. but that doesn't mean that there aren't coverage issues that relate to them, and I'm going to come to that second group of insureds in a moment. But for the first group, we are referring to those insureds who will claim that there has been some contamination of their property, and let's assume for the moment there has been. Does that contamination constitute direct physical loss or damage? And some cases will simply say no, that there must be a physical alteration. You can think of it in lay terms as something that you can see. The floor has cracked, the pipes are broken. There has been demonstrable physical alteration, and therefore there's been physical loss or damage. That line of cases says that if there's been contamination, the fact that you have molecules you don't want that's in the premises or on the premises or on the property, that is not damage because the property is intact. That's one line of cases. The next slide refers to a different line of cases. Leila, if we can go to the, yeah, okay, great, thank you. I'm sorry, we want to get one slide further, Leila, I'm sorry. There we go, that's perfect. This is property, well, this line of cases says that when you have property that's not usable, that will satisfy the requirement of direct physical loss or damage. This is property that is intact. It's fine to the eye, but in fact, it cannot be used. And you have a line of cases that says, well, if your building's electrical system is unavailable, even if it has not been physically damaged, and therefore you cannot use the building, your property, your building is not usable and is therefore damaged, or your water supply is contaminated, or there are toxic or noxious gases. There is a line of cases in that goes along that direction, and you can see how that line of cases would potentially be applicable to the virus situation. And that is a very vital line of cases. Well, I think arguably the more modern cases have moved in that direction. So that is the first battle. Will the courts say that, look, if you have been unable to use your property, that will be sufficient. But it is very fair to say that there is substantial uncertainty regarding that, and one cannot predict on a state-by-state basis, on a court-by-court basis, how that issue will be resolved. If we can skip ahead a few slides, just very briefly to the amount of the claim. In essence, if there is coverage, it will cover your net profit or loss. Leila will explain that better than I, and your continuing operating expenses and how those can be calculated for the purpose of a submission of a claim. The time period for which you receive coverage is the period of restoration. In other words, how long does it take you before your business operations are no longer suspended? Now, there are a couple of important points there. The cases are not uniform about this, but the coverage is for suspension of your business operations. What does suspension mean? Does suspension mean that your business operations have been limited or impinged? Or does your suspension mean that you are wholly unable to operate? Actually, the majority of the cases lean towards you are wholly unable to operate. There's been a complete suspension. But there are cases that say, no, we recognize that the insured has a duty to mitigate and get back into partial operation, and it would therefore be inconsistent to say that partial operation or losses caused by that are not covered. That's an open question. Also, the waiting period is very important. Coverage does not attach in hour one. So if you're able to remedy the cause of the suspension during the waiting period, coverage will not attach. And the waiting period is often 72 hours. So what that means is that there will be a dispute as to whether or not the virus has persisted. And we'll talk about that in a moment. Now, we've been talking about direct physical loss or damage to property, the insured's property. But a very important, different aspect of contingent business interruption, coverage is contingent business interruption coverage. This is where your property is not damaged, but it's where your customer or your supplier's property has been damaged, and they are therefore unavailable to you, and therefore your business is suspended. And there is there's nothing novel about that claim to the extent that policies actually provide for that. Interestingly, particularly in the context of this situation, if your customers are not able to reach you and you've been deprived of your customers or your suppliers as a result of physical injury to their property, then this coverage is in play. The fact that your employees cannot reach you or work with you, let's say because they won't take the public transit because they believe it's contaminated or something of that nature, it does not apply to employees and not being able to access your premises. It applies to interruption of not of your flow of employees, but of your customers and suppliers. The same questions will arise. Has their premises been physically injured and damaged? And the same set of issues about what does that mean will apply. All of which I want to emphasize is very much in play. There are other potential coverages, and the most important of those is civil authority coverage. If the government orders that your property not be accessed, then potentially there is coverage for the interruption of your business that flows from that. The question, of course, is these stay-at-home orders. Do they constitute the sort of civil authority order that will cause coverage? I believe some of them have or will have been phrased such as to recite that they're based upon physical injury in the hope of triggering coverage. But it's not plain that they are. And there will be a fact dispute as to whether or not their purpose was solely to flatten the curve, or whether their purpose was to prevent people from using, for example, public transit or other facilities that arguably have been contaminated, and therefore they're based upon physical damage to property, and therefore they trigger coverage. This will be a huge fight. Continuing on, the issues of proof will be subject to lots of interpretation and permutations. So what does it mean if, even assuming that contamination of the coronavirus makes the premises not usable, and even assuming that that gives rise to coverage, how is it proven that there is contamination? If you aren't in your office taking swabs and doing testing, how would you as an insured prove that? Is it enough to prove that persons with the illness have been in your premises? Will the burden then shift to the insurance company, which is the sort of thing that courts feel free to do, to say, okay, now there's a presumption of contamination and it's rebuttable? Or will the court say, sorry, you as the insured must prove it, you must prove that it was there, you must prove that it persisted, and you must prove that you were not able to timely clean it up within that 72-hour window in the restoration period. All of this is in play. Some insureds may be able to say, look, there is regular traffic in my building, and statistically, I would argue that a certain percentage of people are contaminated, and given there's regular traffic in my building, there's evidence of contamination. Just by way of example, the rebuttal will be, we haven't proven actual contamination. There are exclusions in the policies, some of which are, starting at the bottom here, are less applicable, and some of which are potentially more applicable. The pollution exclusion probably doesn't apply, and it probably doesn't apply because, among other things, the insurers have recognized the need for more specific exclusions, so they have a bacteria and fungus exclusion, and a virus exclusion. The bacteria and fungus exclusion is the older exclusion. It's still something that some policies have, and they have that and not the virus exclusion. And they don't, the bacteria and fungus exclusion does not apply because coronavirus is not a bacteria and it's not a fungus, and the exclusion is simply irrelevant. The virus exclusion sometimes is phrased in terms of particular viruses. Influenza viruses are actually identified in the exclusion, and when that's the case, if the exclusion is written in terms of particular viruses, it won't apply unless it mentions the coronavirus, which is highly unlikely. If it's written generically to simply refer to viruses and losses caused by viruses, the argument that plaintiffs' counsel will make, and I've reviewed some of the lawsuits that have been filed, they will say it says caused by, it doesn't say directly or indirectly caused by. And they will, and those insureds will claim that their losses are indirectly caused by the virus, and therefore the virus exclusion does not apply. Again, to repeat my theme, which is what I really want you to take away, is that there is uncertainty. If you look at your policy that has a virus exclusion, you need to realize that how that will ultimately be construed by the court has not been determined. Now I'm going to just touch on the policy conditions. As I mentioned, insurance policies have a structure, there's the promise of coverage, there are exclusions, but there are conditions that you must comply with. In general, the condition that we are most concerned with is the requirement that you timely report claims and potential claims, and the purpose of that is to give the insurance company the chance to investigate the matter before the issue becomes stale. If the insurance company can claim prejudice that you didn't timely report and therefore they were unable to inspect your premises or investigate your premises or test your premises, then you may find your coverage prejudiced. So you want to be very alert to the requirement to promptly report potential claims. And Leela can tell you what the economics of that would be and what you might calculate to report. And in general, the more information you provide, the less susceptible you are to an insurance company saying, well, you've not provided adequate notice. In general, though, the insurance company would have to show prejudice before it can complain too much about your notice. So the circumstance we have, as I said at the beginning, is that we have the traditional dynamic here. The insured wants all of its losses covered. It's paid for the policy. That's understandable. The insurer wants to provide what it promised to provide and not more than that, and that's understandable. The issues here play out in an extraordinary backdrop. You have legislation introduced in 5 states seeking to compel coverage. You will have insurance departments weighing in on both sides of this issue. Ultimately, you'll have the courts interpreting this, and the interpretations will vary from state to state. Nobody can predict today how these issues will ultimately resolve. What I can say is that most major brokerages are advising their insureds to report these potential claims and to report them in order to avoid a claim of prejudice by the insurer. Most of the brokerages, or many of the brokerages, are not necessarily optimistic that there ultimately will be coverage, but they view it as the prudent thing to do. So I would say 2 things. First, you want to report because of this prudence consideration, but you also want to report and have a discussion with your broker because you may have particular coverages that may be applicable to your business that you may not be aware of. And the prudent thing is to report and then to work with your broker and attorney to monitor the environment and see whether or not, apart from having reported, it is worth then further pursuing a claim. It may be, but it may not be, and you'll want to make a reasonable business decision about whether it's reasonable from a business point of view to invest in a claim. Are there any questions with regard to what was probably a little bit of a quick summary. All right, Leila, I'll let you pick it up. And
Okay, thanks, David. I am going to be discussing the economic impact of COVID-19 to businesses, and if you decide to file an insurance claim, what you need to do to put that claim together is in the way of documentation and how you prepare one of these calculations. So let me get started here. Okay, so the first thing I'm showing you is a timeline to show the economic impact. We've had, unprecedented economic conditions that have impacted businesses, beginning in January 21st, when we had the first case confirmed. Then we had the World Health Organization declared a global health emergency. We had a travel ban at the end of January. We had the official name of the virus of COVID-19, February 11th. February 24th, the stock market plummets. February 29th, the first death reported. March, we had more significant events. President Trump declares the national state of emergency March 13th. We are advised to avoid gatherings greater than 10. President Trump signs the Family's First Act on March 18th. March 27th, we have over 100,000 cases. At the end of April, we've got unemployment at over 6.6 million. It continues today. We've had forced closures, federally and or state mandated, and we've had these stay-at-home orders. And all of this has had an unprecedented economic impact on every business in one way or another. Essential businesses continue to operate while as much as 1/3 of the U.S. economy is shut down because non-essential businesses cannot operate, or they may have to find some other way to operate within the environment. Unemployment is as high as 25%, and our business owners are faced with issues they have never been faced with before. And I think we can all say this has been a very dramatic set of events that have occurred over the last few months. So we have to deal with these stay-at-home orders and the impact to essential businesses and non-essential businesses. Trying to decide, do you keep your employees on staff? Do you terminate them so they can file for unemployment? Or you decide that you might furlough your employees, they can still file for unemployment while maintaining some benefits. How can you shift to operate remotely? Does your business transition to that well? Some businesses do more than others. You also have fixed expenses that continue. These would be rent, your insurance, your taxes, your utilities, or some of your utilities. How do you deal with these fixed expenses when your business has been shut down? Do you completely shut down, or can you change your business model or your operations? Can you retool? Can you provide some level of business during all of this sort of, all these stay-at-home orders? Do you apply for government relief? We have the CARES Act. We have the Paycheck Protection Program. And that's a loan that is direct incentive for you to keep your workers on the payroll. And that loan is forgivable if it's used for payroll, rent, interest, and utilities. So working remotely also involves additional costs as well for businesses. You've got to pay for your home office equipment. You have to consider technology, holding meetings, accessing files, trying to maintain a normal workflow. And if your employees can't work from home, you have other costs that you've incurred as well, which would be your sanitizing, disinfecting, safety equipment, all of these issues. But all of these issues, all these elements impact your business. And so review your insurance policy coverage and consider filing a claim. And as David said, we don't really know how this will really come out, but it's important to file your claim on a timely basis. And if you think you have insurance coverage, to go ahead and do so. So the elements of a business interruption calculation. So we begin with, I'm going to talk a little bit about the insurance coverage overview, and I think David touched on some of these points, but we've got lost business income. And that's a reduction in net income that is a result of the suspension of your operations due to a physical loss at the insured's premises. And so we talked about previously about the physical loss and the interpretations of that. We have a period of restoration defined as the length of time required to rebuild, repair, or replace the damaged or the destroyed property. And the period of restoration can be as long as it typically is 12 months. There may be some extended periods as well. Extra expense are the necessary expenses incurred during the restoration period as a result of the loss. These are expenses that are not your typical business expenses. These are as a result of the loss, the expenses you had to incur. And the purpose of the coverage is to restore the insured to the position it would have held had the event not occurred. So the purpose of the calculation is to put your insured in the place that they would have been in if these events had not occurred to the business was not damaged, and the revenues had not declined. So if you're going to be filing a claim, the policyholder has the obligation to prove the loss, and the proof is in the form of documentation. When we prepare one of these claims, we provide the insured with a standard list of items that we like to have to begin to calculate the claim. We'd like a description of your business operations, your products, your services offered. We want to understand how your business has been affected, what actually caused the loss, and how, in this case, was it a slow decline, or was it on a certain day that you had to shut down? We need to understand all of that. We'd like audited financial statements or internal financial statements for 3 to 5 years, monthly financial statements also for 3 to 5 years, tax returns for 3 to 5 years, a copy of the accounting software or your general ledger. If we could have a copy of your QuickBooks file, that would be really, really helpful. We would like to look at your daily operations as well and try to understand the actual date that there was a closure or a decline in business. Business plans, budgets, and forecasts are also very helpful to us to prepare a projection of your sales that you would have achieved if these events had not occurred. Extra expense documentation is in the form of receipts, invoices, email correspondence, anything that you might have to document these extra expenses that have been occurred as a result of the closure. And then payroll records are also important to maintain. Your business insurance, your business interruption policy may include coverage for ordinary payroll to keep your employees on staff. That coverage can be 30, 60, or 90 days, depending on whatever your policy may stipulate. So once we have the documentation assembled, we can start to kind of build the claim or put the claim together. So we use the historical sales of the insured to project your lost sales. We typically look at before and after. In this case, we have a very short period of time. We're looking at events that began in January, February, that continue through today. So we would really look at the monthly analysis to really understand the trends, the growth rates, your revenue cycle, and we would project what the revenues would have been if the events of COVID-19 had not occurred.
Leila, if I may, how far back in time are you going for the historical?
Well, we like to go back 3 to 5 years, and we can look at the monthly financial statements for 3 to 5 years. Again, we need to consider if there's some seasonality to these businesses, which there may be, like in the months of January, February, through May. So we would look at the monthly financial statements and compare those months from the 3 to 5 years that we have in order to make an accurate projection. Now, expenses are the next step. So we need to understand your fixed expenses and your variable expenses. Now, the fixed expenses are those that continue. That would be your rent, your insurance, your leases, some of your utilities, taxes. And variable expenses are those expenses that are saved. And your biggest variable expense is your cost of sales, your cost of materials. And like a restaurant example, like the cost of food would be your biggest saved expense. If your restaurant isn't open, you aren't incurring those expenses. You don't have the revenues, and so you don't incur the costs associated with those revenues. Your rent, insurance continues. Those are fixed. They don't fluctuate, and they don't decrease with the level of sales. So we understand the fixed and the variable are those expenses that are saved. The fixed expenses are those that continue.
So is the concept, Leila, to capture and present to the insurer all fixed expenses?
Well, there are two types of calculations we'll get to next, and I will show how those will both work into that. So we also want to look at the other expenses too. So we've got, as we discussed, the remote working costs, which would be the extra expenses that we have. We also have sanitizing, disinfecting, safety equipment expenses. Those could all be extra expenses as well. And then the payroll component, we want to understand, the cost that you had to keep your payroll on staff. If you were able to, even do partial payments or reassign their job tasks. Again, the coverage for ordinary payroll is for payroll that's other than executives and management. It's really to cover your staff to keep your workforce in place during the time that you have the business interruption. We also need to consider mitigation as well. So we've got some of these government assistance loans. If you have a PPE loan that is forgivable, that is considered a mitigation to your loss. We also have replacement revenue. Many businesses have been able to retool, make hand sanitizer, masks, ventilators. We know that GM has been making ventilators, that Bacardi has been making hand sanitizer, and many businesses that are involved in, I guess, retail have been making masks. And so we have all of our data assembled. We've got our revenues, and we have our expenses analyzed. There are two types of loss of income calculations. There's a top-down approach, and there is a bottom-up approach. And these should produce the same results, no matter what approach you are using. It's good to take a look at the insurance policy to really look at the definition of the business interruption calculation. And many times it will say it was your net income plus your continuing expenses plus your ordinary payroll. But to do the top-down approach, we determine our lost revenues. So we project our revenues that the insured would have received, and we subtract the actual revenues. And if there has been some continuing of business, those would be the actual revenues if it's not a complete shutdown. And then we calculate our lost revenues. And then we subtract from those lost revenues the non-continuing or the variable expenses, or I like to call them these saved expenses. And that is your loss of income. The bottom-up approach begins with the lost pre-tax income. So we project the income that the insured would have achieved, compare that to the actual net income, and that difference is your lost pre-tax income. And then we add the continuing expenses, which would be the insurance, the rent, the taxes, and that is your lost income. To the loss of income, we have the extra expenses, and then we have the ordinary payroll component, and that is the value of your insurance claim. Now, with the COVID-19 adjustments, we have to consider some other, some other adjustments to our calculations. So if we had calculated, in the previous example, our interruption losses is 2.5 million, and we had a forgivable loan, that would be 700,000. We would subtract that, and also profit for unrelated activities, we would subtract that. So our net interruption losses in this situation would be 1.3 million. Again, we want to put the insured in the position that they would have been if the COVID-19 had not, the events had not occurred. So we want to put them in the same position. We don't want to overcompensate them. So we have to consider these other revenue sources to the business. I want to make another comment too about the period of restoration. So David discussed that we have a 72-hour waiting period, and your policy will outline that. So we start our calculations after the waiting period. And we have been in this, I guess, this 3 to 4 month situation here where we've actually had businesses really feel the impact of all of the closures of the stay-at-home orders. So we're really in the midst of the restoration period. So if we are going to start to calculate the claim, we would do it as to a certain point, and we do it, like maybe for 3 months. Then we can continue to revise that and roll forward with that through the restoration period, however long that restoration period is, until the business has returned to normal operations. So what can you do today is to obtain a copy of your insurance policy and the declaration page, which will give you all the information that you need as far as your policy limits and your definition of your business interruption coverage. As David said, it matters when you're filing a claim. If you don't file a claim on a timely basis, that may result in a basis to deny the claim. And again, we don't know how many of these things will come out, or if coverage will be available, but it's important to consider filing a claim at this point, just so that you can document it. And then, of course, to document your loss, you need to gather your financial information, your other supporting documentation. It's really important to keep your accounting records up to date, to post those transactions. Many businesses have not filed their tax returns for 2019. They have those issues to deal with, but it's important to keep your accounting records up to date, do your bank reconciliations, get your monthly financial statements in order, and continue with your accounting. Identify the period of restoration. Again, we've had issues where we've had declines in businesses and then complete shutdowns of businesses. It's important to understand when the losses began, and also to document your mitigation of losses if you have had received loans, any other government assistance, and also your income from your unrelated operations. And it's also important to communicate to your insurance carrier immediately. Be prepared to discuss the impact of your business, the steps you've taken to mitigate your loss, and to discuss your coverage. And that sort of concludes my section. I wanted to let you all know that Eide Bailly does have a checklist for business interruption insurance claims that would give you a list of the documents we typically request to prepare one of these claims, and there's the link. Are there any questions?
So you do have 2 questions in the
two
Q&A.
questions. Okay, I see that. Okay. I think the first one, David, can you see that?
I don't, on the chat, I do not see it. You maybe.
Do you see the Q&A
well,
box?
I can.
I'm sorry, now, bear with me, I do see it, yeah.
Got it, okay.
I see one from Mr. Mills.
Correct, okay. I think that was more for you.
Okay, bear with me, please. Okay, I see a statement, okay. Yes, so the question, I don't know if all the participants can see the question, but I'll paraphrase it in a very condensed fashion, which is, so I understand the question, the questioner believes that there may be an exclusion that might apply to the coronavirus but is wondering whether or not the exclusion would apply when they've been shut down by an order from the governor. And I think this is actually a good example of an open question as to the scope of the exclusion. I do know that some of the cases, the lawsuits that have been filed seeking coverage, argue that the exclusion only applies to losses that are directly caused by the virus, and those plaintiffs will certainly argue that a order of a civil authority is an indirect consequence. But it is not possible, just to state it bluntly, it is not possible to predict how that will be adjudicated. Conversely, it would not be, I would not advise someone to read the exclusion and conclude that they should not file a claim and see how the legal environment develops around that question.
Okay. I think there's another question from Patty here that says, I think that this one is more for me. Where does perishable inventory loss fit into this type of claim? So when we're looking at a claim, we're looking at, again, to put the insured into the position that they would have been in if these events had not happened. So we would assume that your inventory would have been used in the operations. And so if it's perishable, we're still assuming that it would have been sold to put you in the position that you would have been in. So we have to probably have a little bit more details here, but typically if it's this type of inventory, we would not want to kind of double dip. We don't want to compensate you for the inventory and then also assume that that inventory would have been used to produce revenues. So that's kind of a double counting, but then we'd have to have a little bit more detail here to understand the amount of inventory, et cetera. And if you had lost quite a bit of it, but we typically don't kind of double count that as well. I hope that answered your question.
Leila, if I could, I want to go back. I've looked a little bit further at the question that I received, and it appears that the particular exclusion may apply when there's been an order of closure, but then it goes on to say an order of closure at the direction of certain entities, which does not necessarily list the governor, which I believe is what the questioner is indicating, is that the governor engaged in the shutdown. And that's an example of the sort of parsing of an exclusion that may, in this case, be favorable to the insured because the exclusion appears to be directed at the actions of certain entities, but not necessarily the action of the governor. It does call in mind one other point, though. Exclusions do not create coverage. So the reason I say that is, let's assume, just for purposes of discussion, that this exclusion is, in fact, inapplicable. That doesn't mean that there's coverage. That just means this exclusion is inapplicable. You still would have the coverage issues that I otherwise identified of whether or not there's physical damage to property and what that means given the particular facts of your circumstance and given the way the law develops. But exclusions are generally, as a matter of law, narrowly construed. They're somewhat often construed in favor of the policyholder. So if an exclusion requires certain particular actions by certain government entities, then that's what it requires.
Okay, David, I think there's another question here. Do you see the fourth one?
Bear with me.
Okay. I think we have another one even after that.
Right.
Okay, that one's for you. Okay.
Yep. Yeah, this question is asking as to which states might be more favorable to the insurer in terms of, or conversely, the insured in terms of whether viruses are covered. And I'd be reluctant to try to, off the cuff, begin providing a list of states. And I would also say that I don't think we have any data with regard to this particular circumstance. where really I view this as legally we're at the starting point of these questions because of the very unique and remarkable circumstances we are under right now.
It looks like there's another question. Patty has another question about the inventory. So her question is, so when you're looking at the books provided, are you including, looks like an inventory audit for a restaurant type of business, or do you need reports, history of inventory? Well, when we're looking at these calculations, we're really looking at the revenues and the loss of income. And the inventory would have been used in that calculation. If there is some inventory that has been damaged, that if you had large amounts of inventory could be considered potentially some other damage component. But we would typically want to understand, as of the date that you had the shutdown, what that inventory would have been. It's really not an historical item, it's the actual inventory on that date. And if you have any other questions, feel free to just give me a call and I can chat with you some more about this. Again, we don't want to, compensate you for inventory that would have been used to produce the revenue. So we don't want to kind of double count that in an insurance claim situation. But feel free to give me a call. I'm happy to chat. I think we have another one too. Let's see. Oh no, I think that's it. Okay. Any other questions?
Not that I see, so I believe we are good.
Someone has a question. Will this webinar be available offline?
Yep, we have it recorded. It'll take us a few
Okay.
days to get it edited, and we will email that out when we're ready.
Okay.
Awesome.
Thank you all. Thank you all for attending.
Thank you.
Yes.
Very much.
I think we have one more question. Hold on. Oh, that was just a thank you. Okay. I think we're done.
Thank you, Leela.
Okay,
Perfect.
thank you.
Thank you all so much for attending, and thank you to our presenters, and everyone have a
Thanks.
great day.
Okay. Bye-bye.
Bye.
Bye now.